All right, so we'll look at light crude. For many people that are new in here, we are looking at side-by-side analysis where we're looking at a 10-week on the left side, a 2-year daily on the 10-year weekly, a 2-year daily on the right side. And you can see in here the cyclical analysis, the cycle brackets on the bottom, which are a drawing tool, which are just simply guides to help us see the energetic movements of money flow. We use the momentum indicators that we have on the weekly chart right in here, the Hull moving average, which has shown you great strength in here. Note that the reason we use the Hull moving average in here is because the weekly cyclical movements are the core of our directional components for overall analysis. So you can see in here when it turns up right there, it's often an important cycle bottom. When it peaks, as it did right over here, it's an important cycle top. Here, well, there's no peak. It's just simply still going up. And it's come up here and touched that fib extension zone that we have right there. And you'll note in there are two tracks that we have, and that is that after it has some resistance and pullback in here, and this target for this pullback is 54.50, and that would come sometime out in April. Then it would likely get into the next rising period over here, which would take it to probably 66. So this scenario that we have here is a double top scenario because this cycle would be coming into a corrective period. So we have that in there. And then the more likely scenario that it challenges this area 66, 67 out here in the summertime. And then begins to correct after that. Either way, it's kind of a modest pullback that we're looking for over the next 2 months, and then more rally as we go forward. Oil seemed to get a little sloppy today as news came out that the Saudis are planning to raise their output by 1 million barrels a day. Well, they probably need the money, and that would be going against what OPEC has been saying, and maybe that is going to make a temporary top here in the light crude market. You can see in here these cyclical patterns. Now, I'm going to repeat what I said last week, is that if you look on this chart on the bottom in here, if there were a neutral directional component, the ideal cycles would look just like this. Everyone would look the same, every length would be the same if it was following the absolute ideal. If you take this channel and you tip it upward, what it looks like is this. And that's what the principle of summation means when you then take a directional component that's neutral and change it to a directional component that's positive. What happens is that the cycles become skewed and you get longer rallies to the upside and shorter rallies to the downside, and each high is higher and each low is higher, and that's what makes a trend. That's a great example of how cyclical analysis explains all of these movements in the markets. I want you to note, very similar to what we had right over here, not much different than these right in here, is that this cycle has not corrected at all. So there's just no downward pressure. No matter what they said about Saudis creating more oil, the upward energetic component is still strong. And you can see the slim ribbon telling you the upward momentum. Through this whole period, it has never even turned neutral. This is the last point that it was neutral right here, coming from negative. And since then, all of these signals have given you the strong upward movement. Every time you get one of these arrows, what it says to you is that it has corrected internally, and it's likely that there's going to be another move to the upside. And you can see all of those were extremely accurate in there. So the combination of the slim ribbon PO, which is only available to our level 4 members, is just a fantastic way to really get market feel. So light crude really giving you the sense that it is still exceptionally strong, and while it's in this fib extension zone, which may be a resistance area, it's not ready to go down. What would tell you that it's ready to go down or to correct at all? And that would be a cycle pattern on the daily chart that gave you a negative shape to it, a negative formation. So in other words, if you came down over here in these next few days and then rallied and then came down and took out that low, it would tell you that the upside directional force was gone and that you're starting to form negative cycles. Well, we don't have that. And what we have now is simply strength, and that is a great way to get great market feel. What we really want to do is we present the style of analysis that we use is for you to be able to look at these charts at a glance and say, I get it. Just looking at it and saying, I get it, I see what's going on. Because if you do that, then you can internally sense the bias that gives you the highest probability. You want to choose whether you're going to do a long side or short side trade. You want to choose whether your overall bias in light crude is to the long side or short side. In other words, if you had, let's say, option positions on and you were a strategic option trader, well, having a sense for the bias would make just an absolute huge difference as far as overall profitability. So I wanted to take a little moment and just discuss that, because this is just such a perfect instrument to be doing that with, the way these cycles are forming in here.